We interrupt our regular programming with a developing financial bulletin that demands immediate attention. Reports have begun surfacing claiming that insiders at major banking institutions, including JP Morgan Chase, have confirmed that the exchange limit for Iraqi dinars has been raised to a remarkable $100,000 per account. According to the whispered intel making its rounds across investor forums and private messaging groups, this policy change could signal the bank is preparing to facilitate large-scale dinar transactions, potentially tied to a redenomination or revaluation event. If true, such a change would represent a dramatic pivot from standard exchange protocols. Before any investor acts upon these rumors, however, it is crucial to note that no official announcement has been made by Chase, the Central Bank of Iraq, or any regulatory body verifying such a policy shift. This claim has triggered waves of intense speculation among dinar holders. Many are interpreting it as confirmation that a widespread redenomination of the Iraqi dinar is imminent and that Chase is preparing to issue high-limit contracts to approved customers. Conversations in encrypted chat rooms, social media platforms, and online forums are brimming with excitement. Some individuals are even claiming invitations to exclusive exchange appointments or access to internal protocol bundles, allegedly tied to a multi-tiered transaction process. Yet none of these stories provide verifiable documentation or records from Chase or other institutions to substantiate the limits described. Should the policy shift be real, raising the limit to $100,000 per account would mark a sea change in how banks handle currency conversions involving the Iraqi dinar. Traditionally, even licensed exchange houses and banks have been unwilling to transact IQD at anything beyond minimal limits, and most U.S. banks do not transact Iraqi dinars at all. The introduction of such a high threshold would imply confidence in the liquidity and global acceptance of the dinar, factors not demonstrated in current macroeconomic indicators or central bank guidance. As of now, the formal rate of IQD remains in the low thousands per dollar, not at values that would suggest a redenomination is underway. It is vital to place this rumor into broader context. For years, holders of Iraqi dinar have awaited signs of a revaluation, commonly referred to as RV by speculative communities. Numerous analysts and regulators have repeatedly cautioned that until a formal announcement emerges from the Central Bank of Iraq or global institutions like the IMF, claims of imminent revaluation are speculative, allowing Chase or any regulated financial institution in the United States to establish high-limit exchange contracts without public notice or documentation would break from standard financial practices and contradict the compliance-driven environment banks operate within. Any real policy adjustment would require clear guidelines, formal internal memoranda, and external confirmation through broker-dealer networks or public filings. The stories now circulating include narratives of insiders receiving direct messages, screen captures of supposed transactional windows, and vague references to non-disclosure agreements lifted from prior restrictions. These anecdotes create a sense of urgency that can seem compelling, particularly to long-time dinar holders who have been patient through years of expectation. Yet such behavior, private leaks, promises of early access, and elevated thresholds, mirrors techniques historically deployed in unscrupulous investment schemes to drive engagement before confirming substantive evidence. The potential implications of a genuine limit increase are substantial. A $100,000 exchange cap at retail banking level would allow significant investment flows, encourage exposure to IQD holdings at scale, and presuppose that the currency's value may soon justify such volumes. If real, it could also signal preparational infrastructure, central bank coordination, liquidity reserves, and global settlement preparations. But none of these indicators have emerged. There is no public record of Chase training materials for handling IQD at scale, no compliance documents, and no press statements from any private or governmental financial bodies outlining the parameters of such a policy. Moreover, from a construction of macroeconomic feasibility, Iraq's economy does not support a near-future scenario in which diners hold that much exposure at a valuated rate justifying $100,000 trades. Export revenues remain tied to oil production and trade balance, and while reforms are in progress, currency policy remains tightly managed. If massive revaluation were underway, you would expect multilateral updates, reserve disclosures, and published legal frameworks, none of which have been observed. Taking a step back, investors must weigh the risk of acting on incomplete information. Financial professionals emphasize that chatroom hype and anecdotal intelligence, particularly in the absence of verifiable sources, are insufficient for decision-making. They stress that until Chase or another regulated financial entity issues a formal notification, via their website, filings, or direct outreach to clients, no change in policy can be assumed. It is possible that chatter is rooted in misunderstanding or misinterpretation, internal testing, informal proposals, or rumor misconstrued as formal policy. If events do progress legitimately, it would happen openly with documented procedures, transaction receipts, and broad communication through official channels. At the same time, we recognize the psychological pull this narrative holds for many. Holding physical Iraqi dinar has come with the hope of sudden validation, and news of institutional readiness at elevated limits is exactly the kind of signal longtime holders want to hear. Yet emotional investment without empirical basis has led many to commit funds prematurely, only to see promises evaporate. History is littered with reiterative cycles of high-limit rumors, redemption hints, and bank-level leaks that ultimately proved unfounded. From a compliance perspective, conducting $100,000 in IQD exchanges would trigger stringent Know Your Customer and anti-money laundering requirements. Banks would need to verify source of funds, operational purpose, and ensure legal clearance for cross-border currency movements. It is improbable that such transactions would be quietly enabled without observed compliance activity or public guidance. No compliance alerts, no bank advisories, and no client advisories have appeared to support these claims. At present, the only rational approach is vigilance and restraint. Investors with dinar holdings should monitor official platforms, Chase's corporate press release page, filings with the Securities and Exchange Commission, public communications from the Central Bank of Iraq, and reliable international monetary news outlets. Absent confirmation from any of these sources, the $100,000 limit remains a speculative rumor, not actionable fact. Should any credible confirmation emerge, it will be accompanied by structured processes, disclosure requirements, and full documentation. In closing, while chatter of Chase insiders confirming a $100,000 IQD exchange limit has stirred excitement, it remains unverified and highly speculative. No formal announcement has been made. No official policy documents or bank disclosures back the narrative. Investors are advised to proceed cautiously, to rely only on documented evidence, and to consult licensed financial advisors before considering any transactions predicated on these claims. Until Chase or an equivalent institution issues formal word, do not assume the rumor reflects authentic policy. We will continue to monitor the situation closely and deliver any confirmed updates as soon as documentation surfaces. For now, remain measured, stay informed, and do not make financial decisions based on speculation.